So getting back to preferred shares don't have voting rights. And as an owner of a preferred share, unlike an equity, you don't really participate in the earnings per se. So it's more like a bond in that respect, as you just get your dividend. And the dividend is set. Now, if the company goes bankrupt, there is an advantage to preferreds in that the bondholders get paid first, and then the preferred shareholders get paid, and then finally the equity holders get paid. So when you get people trading stocks that are close to being bankrupt, a lot of them don't realize that they're going to be the last person to get paid. And 95% of the time, that means you're not going to get anything. Like Sears and all that, they have to pay the bondholders, and they have to pay the preferreds. If anything is left over, then the shareholder gets it. That's the risk of being an owner of the company, right? So, and you got to be careful. So the par value of this is $25, meaning when it gets, like they say, they can redeem it back after 5 years without a premium. You don't want to be buying it up at 26 or 27 because they could redeem it at 25, and that's going to kill your yield. So you always kind of want to buy kind of below par. And I ended up buying this one at, where's my line there? Let's say $24. So if they wanted to redeem it right now, I'd get a $1 capital gain. I looked at the last redemption date, it said April the 1st, but they didn't have one after that. So, and this is perpetual, might go for years, right? So I'd have to see what the next day is it gets redeemed. So the coupon rate is $1.30, and the price, I guess, is $23.87, which gave me a yield of 5.45%. Again, that 5.5%. I'm pretty happy with that right now. It's not a reset. Now, another thing that you got to watch for on preferred shares, if they're cumulative or non-cumulative. This is cumulative, which is very important, which means if they stop paying their dividends, then, which can happen, they have to pay the preferred dividends before they start paying dividends to the common shareholder. Now, I guess I should have mentioned this is Weston, George Weston Limited, which is basically Loblaws. That's the biggest thing, the George Weston family, right? So I'm quite comfortable that even the dividend in Loblaws is going to be paid, but that's only about 1.5%. So in effect, I'm getting Loblaws paying me like a 5.5 dividend, but with Loblaws maybe there'll be more of a capital gain. But again, I'm looking for income. So dividends paid quarterly, I have to check on that. And there's two big rating agencies, which I talked about before, but preferred shares, there's DBRS and there's the S&P. So the DBRS rating is preferred-2, P.F.D-2, which is satisfactory credit quality. The S&P gives it a P-2 high, which is equivalent to a triple B plus. So that's not the top rating. There's a P.F.D-1, so there is one rating higher, but there's one below that, and the next one below that is speculative. So it's fairly high rated. S&P, we're, I even have it here. S&P P2. Yeah, so it's a broader scale. You've got P2 high. This is P2 high, so it's a triple B plus, P1 low, which is a A minus, then you go A plus, AA minus, AA, which is the very highest. Here, if we drop one, we go down to triple B, then a triple B minus, and now you're getting into non-investment grade kind of investments. So that one there, again, if I can find something that's not going to be too volatile and give me, 5.5% return, I'm pretty happy right now. And I still do have some technology companies. Actually, one I should mention, it's actually done better than what I thought it would do. I don't know if I've mentioned this in the video. I was going to do a full. Is Illumina, which is DNA manipulation and drugs. I think I mentioned in the past, and it's probably getting a little bit of a run out of the COVID-19 just because of its DNA and that type of thing. I bought it 270. We've had a good run up to 318. I almost sold this off because it was a little bit expensive even when I bought it, but it's held up pretty well. Again, healthcare is a little bit more on the defensive side. And I'll just quickly mention one more, and it's maybe I'll leave that till next week. I thought I had it on here, but oh yeah, I got it here. WPT Industries, and it's a REIT, and the symbol is, again, I'll put these in the notes, WIR.U.TC, and it dropped a lot from 14 all the way down to 7, so 50% correction, and I missed that. I didn't find out about it till the other week, and I bought around 10, so I'm not, again, small position, see what happens, but I think it's over a 7% dividend, and the dividend's been steady for the last 4 years. What I liked about it is more industrial properties in the States, so some geographical diversification, but it's warehouse and distribution. So there's more and more people shopping online and more e-commerce. One of their bigger customers is Amazon, so they do have some warehouses dedicated to Amazon. And I think when we come out of this, there is going to be probably a permanent shift, or accelerated the shift to online shopping. Again, it's got a debt to book of 43. It's pretty average. Adjusted cost funds operations 91%. I looked briefly at their mortgages, pretty stable. We'll have to see how the renewal rate is. It's 3.75 weighted average on their loans, and the average term was 3 years, so they're not having to finance a lot right away, but if things get better and they're forced to refinance at say 6 or 7%, then this probably no longer would be a good investment. But again, it was just hunting for that yield and something relatively safe. It has bottomed out, came back. Of course, if we really downturn, we had 50% lower from we are here, these type of things might just have to unwind, because we could test that 7.5 again. So, but it's just things I'm trying to make some money on the long side. Is still not 100% sure what's going to happen. Anyways, that's it for this week, and I'll try to get the video again for next week. Next week should be, I think, an interesting week. We'll see what happens. And I'll quickly mention Bitcoin. It's been pretty stable over the last week. It's been trading, dropped to 9,000 and then came right back up to 10. And it's kind of been hovering around the 10 mark. So, and gold did come off Thursday and Friday, which was to be expected with such a strong market rally. But I do continue to hold Centerra Gold, and I think the gold, with all this money printing, and if it's not manipulated too much, we could see gold going over 2,000, but we'll just have to wait and see. Okay, thanks